correct. So let's bring in Nick Twidale now, Chief Market Analyst at ATFX, joining us right here in Sydney. Nick, I just want to get your initial reaction to what we saw there. Yields slumping, maybe reflecting growth concerns. How are you balancing the risk of recession, risk of stagflation going forward?
I mean, I think it's very real and it's very strong, especially after the updates that we got from President Trump yesterday. And I think the market's reacted accordingly and they're pricing it very strongly. It's going to be another interesting day for us across the globe and particularly in US markets today. But at the moment, I think we really are in that sort of sell dollar and there's a real flight to safety.
Yeah, well, the dollar getting hammered. Can you still think of it as a haven?
It's very difficult. I think it will come back to its haven status, and it's going to be tricky to trade over the next few sessions and probably over the next few months, to be quite honest with you. We're going to be keeping our eyes on those news wires, and Bloomberg's news wires, very, very sharp because of what we could get from President Trump at any time. But I think for the moment, we've got to look at probably the underlying fundamentals, and those US yields outstripped everyone else to move down last night, and that's why I think the dollar took such a tumble.
Tell us a little about the complexities of trading the dollar in this environment, because we have all these country-specific tariffs, probably country-specific negotiations. Are there any particular pairs you're watching here?
Well, I think from the majors, I think we have to look at those haven trades for yen and for Swiss, and they had huge moves yesterday, and I think we've seen 3.5% out of dollar yen in the last 18 hours. And that's a huge move, even for dollar yen. I think for some of the other currencies, we're going to be trading the dollar. And you've got some FX traders now that just want to take the dollar out of the equation. So they're almost trading tariffs on a jurisdiction by jurisdiction basis. So, you know, maybe yesterday you're looking at euro sterling, which is out of the majors, is probably a highlight because the UK got hit less than Europe. So probably it's more downside for euro sterling. But then across the board, looking at those crosses, particularly yen crosses and probably Swiss crosses, that's where the opportunity and probably the trends are going to come. Whereas the dollar, I feel, is going to be very volatile for the next foreseeable.
Well, in terms of yen, we heard from Goldman yesterday saying, look, yen is a good hedge against recession risk. Would you agree with that, and is there anywhere else you'd go?
Yes, I do. I think Swiss to a certain extent, but I think Switzerland's less so than the yen, and the market reacted very strongly for yen trades yesterday. It was interesting, if you looked at the initial Asian session, we actually saw the dollar increase, especially against the Aussie, the Kiwi, Euro and Sterling. And it had good moves, and then it was only really later in the day when the US markets came in that those yields got smashed, and then the dollar went with it.
The job's got a lot harder, apparently, for the Bank of Japan. What do you see being the path of policy normalisation now?
I think they have to. We know they want to hike rates, and they're keeping a very strong focus on inflation. I think some people are even throwing out May hikes. I don't think that's going to happen. Some of the major banks in Tokyo are looking at June, but really they're in the same position as every other central bank. We have to look at data, and we have to see what's coming next from President Trump. And that's the issue we've got as traders, central banks have got as administrators as well. They've got to react to what's going on in the market as well as the underlying fundamentals.
Yeah, and sticking with central banks that have a difficult path ahead, I mean, what next for the Fed? Because on the one hand, there's the inflationary impact of tariffs. On the other, growth's looking a bit shaky. So where to from here? Well,
I think they've got to be looking very closely at data. And obviously tonight we've got non-farms. That's probably one of the first ones. They've got the twin mandates of jobs and inflation. That stagflation problem is a massive issue for them, but clearly the market's now pricing in rate cuts faster and harder. But can they do that if inflation's going to remain sticky? So it's a real tough job for the Fed as well. So I don't think they're going to be appreciating Mr. Trump's moves either.
Before we let you go, I want to get your views on some of the emerging Asia currencies, which were hit pretty hard yesterday because also the tariffs on some of those nations are very strong as well.
Of course, yeah. I mean, I think they're going to remain under pressure for the foreseeable future as well. They're harder to trade because liquidity is such a massive issue. But for the short term, you've got to be looking to sell those on any rallies. And it is really about watching whether any of these deals, which President Trump is talking about, if a deal comes through for any of those jurisdictions, those trades could unwind very quickly. Once again, it's probably something you look to take the dollar out of the equation and maybe look on a jurisdiction by jurisdiction basis, even in Asia. So looking at those Asian crosses, they're trickier trades to make, but they're probably going to give you those trends.
Let's wrap it up on a local note. How about the Aussie? I mean, coming under pressure as a commodity currency, but again, against the US dollar, also weakening. How do you see the Aussie performing against some other majors?
So I think the Aussie is going to, it's been under pressure against particularly sterling and euro, and I think it's going to remain under pressure while these global growth stories are coming through. And we've actually got certainty a bit from yesterday's tariff updates. We've got that 10% across the globe, and then the reciprocals feel they're the unknown. But I think while we've got that, we know the Aussie's going to come under pressure, and probably you would look to be sell any rallies for the Aussie against euro, against sterling, and probably on other crosses as well.
All right, Nick, we'll have to leave it there, but thanks as always for joining us. That's Nick Twidale, Chief Market Analyst at ATFX.